President Trump tweeting a little bit ago that the China trade deal is in advanced stages. Do you believe they get there?
I do think there will be a deal because I think both sides really want a deal. I think the Chinese recognize it's necessary for them to really get their economy in the shape that they want it to be and to have a deal. And I think the Americans are ready for a deal, too. So I think a deal will likely get done in the next few months or so.
Is it a deal that America needs to see?
I think it's going to be probably a deal that everybody will like. No deal is perfect, but this is a deal that will not have to be technically approved by Congress. There'll be hearings, but with USMCA, for example, you have to get Congress to approve that, which hasn't happened yet. This is not a deal that will have to be technically approved by Congress.
Now, Jay Powell, you know him well. You hired him at Carlyle. You interviewed him recently on stage. What do you hope to hear from him this week when he testifies in front of Congress?
Well, I think he's probably going to say somewhat what he said before, which is that the Fed is monitoring the data, but right now the data indicates that the Fed is on course to kind of stay where they are. I think he would surprise people if he were to say, well, we're going to make a reversal, we're going to increase interest rates or decrease interest rates. I think people are expecting him to say pretty much what he said before when I interviewed him and what he's also said recently in other places, that steady as she goes right now.
Is that what your data says? As Carlyle, you own businesses and you look at different pockets of the market. You have a really good read on what's going on in the economy right now. Does what you see with your underlying businesses at Carlyle match up with where you think the Fed is?
Yes, we have data, and we share that data with some government agencies when they want it from time to time because we have a pretty good look on the global economy. We own more than 200 companies or partial stakes in 200 companies in some cases all around the world. And we basically feel that the U.S. economy is in reasonably good shape. It's not going to grow at 4% this year, or perhaps not even 3%. I think probably closer to 2.2 or 2.3%. That's still reasonably good. Remember, we're still in a 10-year growth cycle, and to be growing at 2.3% after 10 years is pretty good for an economy of our size, certainly.
And obviously the markets have reflected that, at least in 2019. What do you think is something that could help propel the markets higher, the equity markets higher, and what do you think are some of the risks that could derail it at this point?
Well, clearly the markets are feeling pretty good, the fact that there's likely to be a China trade agreement. I think that Congress is not likely to change the tax laws that we currently have. There's been a lot of discussion recently about tax changes. I don't think that Congress is likely to do anything in that regard in the next 2 years or so. And I think the president has been very good in deregulating some of the over-regulations in the economy. At least that's the perception of the business community. So I think the economy is in reasonably good shape, and the business community has a fair amount of confidence, and there's a fair amount of consumer confidence as well.
I want to ask you about modern monetary theory.
Okay.
And this idea that the national debt is seemingly less and less important by policymakers on both sides of the aisle. Where do you stand on this as someone who lives in Washington, looks at issues related to the national debt all the time? Do you think that's the right way to?
Well, recently, Larry Summers and Jason Furman had an article in Foreign Affairs, which is the publication of the Council on Foreign Relations, and it said that actually the debt we have is not as big a problem as previously had thought. We have about $22 trillion of total debt, and we're adding about 1.2 or 3 trillion a year. To me, that's a problem. Something we have to address at some time, but it's not an immediate problem, in part because we are able to sell our debt at pretty low prices. People really have to buy dollars. We're the only reserve currency, and we can print a fair amount of dollars and sell it at very low rates. So for the time being, it's not as big a problem as traditionally people would have thought, but it's something that will have to be addressed at some point, hopefully by my children, if not my grandchildren.
And if we do go into some sort of a downturn, does that threaten the ability to keep running up the tab on our national debt?
Well, if we went into a downturn, presumably interest rates would be lower, so it'd be a little bit cheaper to service that debt. But the GDP would probably be down, so it might be harder to get tax revenues. There's no doubt that it'd be better to have less debt than we have, but right now it's not an immediate problem. It's not the greatest problem we have.
Now, you practice something called patriotic philanthropy.
Yes.
Looking at restoring various monuments, museums, different areas of the U.S. You donated a copy of the Magna Carta, for example, and helped restore James Madison's estate in Montpelier. Lately, there's been more and more talk from presidential candidates and politicians about this idea of wealth redistribution through taxation primarily. Do you see that as patriotic philanthropy, or is that something else?
Well, I'm not sure that the patriotic philanthropy, in my view, is giving money or your time, your energy, your ideas to remind people of our history and our heritage. That's what I mean by patriotic philanthropy. To remind people of our past, the good and the bad. Remind people that Montpelier or Monticello were places where there were slaves, and I therefore think it's good that those places are being rebuilt so people know the good and the bad about the people that were there. In terms of tax redistribution, I think actually right now it's unlikely there'll be any tax redistribution in the next couple of years. I suspect that the more we talk about it and the more moderates get scared about it, you're probably likely to help the people who are against it get reelected. In other words, I don't think there's a big groundswell of support that's likely to change Congress's ability to tax in a way that some of the key candidates are talking about. Now, remember, we've had a tax system for quite some time. We don't have a wealth tax in the United States. It's not even clear if it's constitutional. And I think it's unlikely Congress is going to impose a wealth tax anytime soon.
Do you think we should? Would you be willing to pay more taxes?
Well, I pay a fair amount of taxes, I think, by normal human standards, and I think it's important that everybody pay their fair share of taxes. So I do pay a fair amount of taxes, and I'm happy to pay the taxes that I pay, but I do think that we have to remember that you have to have some money to let people invest. If you overtax, you're not likely to have the money to invest. And I do think that people in our country should get a fair tax. And I think we have a system that's not perfect by a long shot. It's not a perfect system. And we can always improve it. And I think there always should be improvements. But I think it's unlikely that Congress is going to have a wealth tax or have marginal tax rates go to 70%. To the extent that people talk about that, I think it's more likely than not going to produce people who are saying, well, I don't really want that. And therefore, while I might not like the Republican view of things, I'm more likely to vote Republican than I would otherwise do because they're afraid those taxes could be imposed. So I think you have to be careful when you're playing with fire in that regard. If you really want to make a change in government, you have to be careful, in my view, that if you talk about that so much, it's unlikely to happen, but it could scare some people into voting the opposite way that you want them to vote.
Interesting. I think Wilfred Frost has a question for you back at the NYSE. Wilf?
Okay.
Hi, David. Thanks very much for joining. Just quickly, I just want to follow up on that particular topic. You said the tax system, never perfect, always ripe for improvement, but you've got to be careful what you do. Would you say it's fair for some people to say that private equity executives are one of the areas where it's least perfect since you pay a large amount under capital gains tax because of carried interest, which is lower than income tax for someone of your level of success?
Well, there's no doubt that private equity taxation has gotten a fair amount of attention over the years. I don't think it's the biggest problem in our tax system. Relatively speaking, it would produce, even if you changed the system and went to a different type of system, ordinary income taxes, for example, instead of carried interest capital gains, it would produce relatively modest amounts of money for the federal government. If you really want to increase the amount of money the federal government's getting, you're going to have to tax the middle class, and that's obviously very difficult to do. There aren't enough extremely wealthy people to really have a big impact on revenue if you change their tax rates. Even if you went to higher marginal tax rates, there just aren't enough people in the Forbes 400, obviously there are only 400 of them, that you're going to make a big difference. So if you really want to have more tax revenue and have greater fairness, you're going to have to tax people who are much lower, closer to the middle class, and obviously that produces some political problems.
David, on air this morning on Squawk Box, Becky Quick sat down with Warren Buffett, and they discussed the balance between public equity and private equity. Let's take a listen.
They call themselves private equity, but they're really private debt, to a great extent. But that trillion might buy as much as, say, $3 trillion of assets if it was leveraged with $2 trillion of debt. Well, the total stock market is something like $30 trillion. And if you take the top 5 companies, you knock another, or 6 companies, you knock 4 trillion off that. So you're down to something where the buying power of private equity, plus just the normal buying power from companies that want to get bigger, it's just a huge amount of competition.
David, do you think that's a little bit of sour grapes there from Mr. Buffett, given the success your industry has had in attracting more assets under management in the last couple of decades?
Warren Buffett is perhaps the greatest investor ever. He's somebody that I regard as a great role model. He's somebody that I regard as a friend. I'm not going to say that anything he says is wrong because I don't know enough to be able to criticize anything he says. Let me just say that private equity has done a pretty good job of improving the efficiency of companies in the United States for some 30 or 40 years. And around the world, people like private equity to come into their country to show them how to improve and modernize companies. And I think it has created a lot of value for the economies in which it's operated. There's no doubt there's a fair amount of money in private equity now. That's because the returns have been very good. People aren't putting money in private equity because the returns are bad. It's because the returns are good. The returns may not be as good as Warren Buffett has achieved. Nobody probably can get those kind of returns. But we've done reasonably good for our investors, and we're quite proud of what we've achieved.
David, it's Courtney here at the New York Stock Exchange. I have a quick question for you in regards to the trade talks. It does sound like you're confident that we will have some kind of a resolution between the U.S. and China. But of course, the devil is in the details, as they say, and we really don't know where we are on any of those details. Is it possible that China could be unhappy with the final terms and possibly could change the way that they buy or hold U.S. debt? Is there any risk there that we should be considering?
Neither side will be completely happy with the deal. All trade deals, all deals of any consequence, have things that neither side really likes the most. But as I have had discussions over the years with the central bankers in China, they do not look at the buying of U.S. debt as something that is a political tool. They think it's an important thing for them to be able to take the excess reserves they have, the foreign reserves, and put it into something safe that they know they can get their money back with some interest. And there's nothing else that they can really find that's equivalent to U.S. Treasury bills. So I don't really think it's going to be used by the Chinese, whether there's a trade deal or not. But I do think there'll be a trade deal because clearly both sides want a trade deal, and I do think something is imminent in the not too distant future.
Now, David, I know it's a little early to be looking ahead to 2020, but still there are candidates coming forth pretty much every other day at this point.
Yes, I'm embarrassed to say that I'm one of the few people I know not running for President of the United States.
Okay, we've got some news here. He is not running for President of the United States. But a lot of your business peers are running for President of the United States or are considering running for President of the United States. Do you believe that someone who's more of an independent, like, say, Howard Schultz, should be running for President of the United States? Do you think that someone with that type of a background should be running as an independent or should be running at all?
Well, I don't know if Howard Schultz wants my advice, but I would simply say that we have seen independence affect the outcome of elections. Clearly, Ross Perot, I think, affected the outcome in 1992. I think John Anderson had some effect in 1980, I would say, when he ran against Carter and Reagan. And I think Ralph Nader probably had some impact when he ran in 2000. So there's no doubt that independence can make a difference. Now, the question is, do you have a moderate to Republican independent running, or do you have a moderate to a liberal independent running? If some moderate to Republican independent, for example, the governor of Maryland, if he were to run as an independent moderate Republican, he'd probably have a fair impact on the outcome of the election. He hasn't said he's doing that, but I think you have to be able to figure out whether you want to take votes away from a Democrat or votes away from a Republican. But it's too early to say. As you say, it's very early. And we love politics in the United States, and we love to talk about how early it is when people start running this early, but it's a long way away. And the point I'd like to make to people is this. If you go back the last 10 presidential elections, 2 years in advance, and try to predict who will be president 2 years subsequent to that, you'll be wrong almost every time. You almost never would predict who was going to be president 2 years in advance. Nobody would have predicted 2 years ahead of the last presidential election that Donald Trump would have been elected. People wouldn't have predicted Jimmy Carter. They wouldn't have predicted Barack Obama 2 years in advance. They wouldn't have predicted so many people who got elected. So it's fun, it's interesting, but it's just too soon to really know what the impact is going to be of all these candidates running around.